Top of mind, Manisha is here in our studios to tell us exactly that. Manisha, hi, morning.
Prashant, thank you so much for that. I'll start with the crude oil prices, and I do a bit of a rewind for 2022 there. So WTI and Brent crude prices, while are closing nearly 5 to 10% higher on this year, we have seen prices decline by 45% from the highs that we've seen in this year. The latest gains clearly come in on the back of Russia saying that they're going to cut output by nearly 5 to 7% in the first quarter of 2023. This is the gas prices, what they have done, and quite a divergence there, right? Because the US gas prices have gained up by 28% because of the record exports and because of the kind of coal that we are seeing there and the inventory decline. But the TTF gas prices, also the European Union gas prices, have declined as Europe, as an average, has 83% of capacity of gas holdings at this point in time. That has led the premium of the prices. The crude products, in the meanwhile, have done quite well. So whether it's gasoline or heating oil, strongly in positive. But the best performance in the energy pack clearly comes in from coal, 138% up for this year. And that is on the back of underinvestments and because of the higher electricity prices led to a lot of people going in for coal in this year as well. And the expectation that the first half of 2023 could be positive for coal going forward as well. Take a look at the precious metal prices then, and we have seen good gains onto that one. That's metals on your screens first, and copper prices made an all-time high in this year. So did aluminum. From the highs, we're down between 35 to 45%, and for the year, down between 15 to 16% as well. A very strong decline is what you can see for the zinc prices. Also, weaker demand coming in from galvanization. Even as the zinc inventories in Shanghai and LME at record lows, we haven't seen a lot of support coming for that. Nickel should come in up on your screen because the story of the year clearly came in from nickel, $100,000 per ton of a price, which clearly was brought down to $48,000 by LME. 2 days of suspension and so much of surveillance work done. Even with that, 45% of gains is what we are closing with this year as. So the best gains in base metals and ferrous metals clearly comes in for nickel. Negative closing for steel and iron ore. Last year, cobalt prices gained up by 80%. This year, we've seen profit taking in this. The best gains clearly continue for lithium, 109% on the higher side on the back of weaker supplies and strong demand from the electricity and renewables as a sector there. Precious metal prices, if you look at that, we've seen gains come in for gold in the Indian markets, not so much in dollar terms, but the silver price is clearly an outperformer, 3% up in dollar terms and nearly 15% up in the rupee terms as well. In the international markets, platinum continues to outperform. Last year was 7% of a decline. This year is 5% on the higher side.